Conrad Saldanha is with us, Managing Director and Portfolio Manager at Neuberger Berman. Conrad, good to have you with us here. Thanks very much for your time. What will FIIs do? You've had a view on India. You've been positive, but broadly, FIIs as a cohort, they've been big sellers. Yesterday, for example, they sold about $1.5 billion. So one can make the argument that it's not as if FIIs have been buying. Locals have essentially supported the market higher at a broader level. So what if they stay out? But just wanted your thoughts on how you see this entire scenario play out.
Thanks for that, Prashant. Like I mentioned last week too, and when we were in person, that I think there was definitely a positive view that the FIIs have been sellers and they would come back if there was resounding victory. I think it comes down to fundamentals, right? So I think the folks who are overweight in India and have exposure, a few select funds, I think they stay the course. But it comes down to valuations for a lot of us when you're looking at it. I think the election. In my mind, obviously, there's a lot of volatility around that. It'll probably be noise in a couple of weeks, but it's going to come down to fundamentals. And I think the infrastructure side has been a significant growth. You're seeing that in the GDP number, but also in the companies. The question is, what do you pay for it, right? And if you're paying triple-digit PE multiples, I think that's what keeps people away, especially in a context where tactically now, China's looking a lot more attractive and excessively discounted from a valuation standpoint, and that's starting to see that tactical move, seeing funds start to close those underweight positions. So, India was priced in a sense for perfection, so I don't think there's an immediate rush for foreign investors to come into India at this point, given valuations, and the elections may be taking a little bit of shine off in the short term, but it comes down much more than politics. In my mind, it comes down to fundamentally, is there good opportunities and good valuation support for the market?
All right. Hi, Conrad. Good morning and good to see you. We're Nigel on this side. If I'm not mistaken, the total fund size is around $8 billion, and out of that, 20% is allocated towards India?
Yeah, the fund size, the corpus is smaller given EM, and I mentioned last time to you, part of the selling you've seen in India is not because of India itself. For a lot of EM funds, we've seen redemptions out. And so that fund size is lesser, but I would say about $1 billion is what our exposure to India is.
All right. And you're a bottoms-up investor as well. You've participated in various QIPs. You've been buying stocks from the open market as well. What do you do now? Because the headline index itself was down more than 5% yesterday. And individual stocks, well, they corrected more than 10% odd. Will you be looking to get into, taking a bigger slice of some of those positions you already have? Given that we could see some bit of volatility, will you start allocating right away, or would you prefer to wait by, let the dust settle, and then you start getting in again?
Yeah, so Nigel, for us, we don't turn over our portfolio much, and so what we would do is probably where the exaggerated moves are and fundamentally we find a lot more upside, that's where we're going to gravitate towards, right? And so incrementally just adding to those exposures, we do have limit prices on these names where we do think our entry price gives us that 30-40% type upside. And as some of these share prices obviously have corrected 20% in a day, but for us, it'll be being disciplined on our entry levels and specifically in adding to the names we already know and we own. And that's where you see us deploying capital into those. It's not going to be a blanket. Names that have gotten hit hard, let's start to buy them for a short-term trade for the next day or two. That to us is just super difficult to call. And honestly, we're investors, right? And I think it's better for the market dynamics longer term, just to be longer term investors here. And so we're going to pick stocks we own, we know, and where the valuations are supported in the downdraft.
So, Conrad, hi, good morning. We've been looking through a lot of these foreign broker notes that came in after the event yesterday, right? And it's interesting. And you have the likes of a CLSA and a Jefferies getting a little cautious on the whole CapEx theme. I mean, for instance, Jefferies was very early on real estate, and now they're advising cutting back a little bit of that exposure, maybe in favor of FMCG and defensives. There are others like Morgan Stanley. They say nothing much really changes. They're not expecting the government, this new NDA 3.0, to be materially different in its policy approach. Given that the views are fairly split, where do you stand, and what will your portfolio tilt be? And now I'm not talking today or the next month. I'm talking about over the next, say, a year or two.
In terms of the view, I don't think it changes overnight, right? I think part of the struggle we've seen, and maybe that's why the voter turnout and went the way it did, was that you're seeing this marginalization right at the low end, and we spoke about the K curve. So consumption has been soft, and especially as you go down the income level. So they've kind of voted, right? And that's a message. So yes, infrastructure looks great. It's a massive contribution to GDP, but you cannot ignore the other elements of it. And so I think where the disposable income is starting to get squeezed a little bit, we have to make sure that doesn't creep up into more the middle income levels. So for me to, yes, shorter term, the consumer staple names look defensive, but can you see that growth come back more sustainably? To me, is the question. And so, from I think infrastructure still looks good. I think in certain pockets of it, maybe the spending was super strong, but also valuations maybe got exaggerated. So there's less upside in areas like that. But I do think some of the private sector financials, I know one of your prior guests spoke about Chola. They're executing, I'd say, IndusInd Bank right through their MFI business through Bharat Finance. They look well positioned also on the CV side of the business. So you've got businesses that are still attractively valued, that are growing well in this environment. That's where I would focus on versus taking major sector calls at the moment based on an election outcome. For me, it's going to be a continuation. We've had coalition politics in India as far as I can recall, barring the last two. And so I think that I think it just continues, and you gotta have a valuation discipline where a lot of these infrastructure related names, some probably with not the best track record, have seen massive re-ratings, right? And I think you need to start to come back to fundamentals and earnings versus just paying a massive money flow into re-rating these stocks.